Yeah, hello everyone. Happy New Year and welcome to 2026. I just want to use this opportunity to give you guys an update on the previous analysis we posted, few days ago before the New Year. And I also want to correct something here. The main reason why you don't see me scanning from one time frame to another when I'm trading, I only focus on the lower time frame price behavior, which is my 1 minute time frame and the 15 minutes time frame respectively. Yeah, most times I still make use of the 5 minutes time frame, but if you want to understand how the price reaction take place, or if you want to understand how the displacement takes place, you have to focus on the lower time frame price reaction, not you trading with the 4 hour time frame or the 1 hour time frame. I don't even look at the 1 hour time frame. I don't have any business with the 1 hour time frame. I only need to mark my areas of liquidity on the 15 minutes time frame, then wait for the price displacement for me to execute my trade. The only time for me to look at the higher time frame, maybe when I'm trying to get my daily bears, for the week, I can start with the top-down analysis on the higher time frame, maybe from the daily time frame or the weekly time frame down to the 15 minutes time frame. So you need to understand that the price action is always flawed. So you don't focus on the higher time frame price reaction all the time, looking for your daily pairs and all that. I know is very necessary for you to trade with a higher time frame. I don't see it as a bad thing, but I only do what works for me, and the rest is basic noise, which I don't allow it to enter my inner matrix. So I don't even care about scoring the market for the upcoming weeks or days. The most important thing is you focusing on the major key levels, to understand how the price delivery takes place. That doesn't mean I don't make mistake. Yeah, I know I can take back-to-back losses, but there was never a time I'll wake up and say my model is no more working or I'm trying to learn something else. No, don't get me wrong. A lot of people trade SMC, a lot of people trade ICT, a lot of people also trade S&D. But if you really want to become a consistent, profitable trader, you need to understand that you trading the S&D, which is the major price action, will only help you to understand the liquidity concept, because liquidity runs the market. I don't care about what every other person tells you out there. Your areas of liquidity are the high probability areas in the market where price have reacted multiple times. So you can't just wake up and start selling gold because you see some maybe bearish puffing candle. You need to focus on the model. And this year I'm not going to sell gold for any reason. I only care about my long positions. The only thing I should be worried about is my drawdown. So most people don't lose because of the market. Yeah, they lose because they don't understand that psychological aspect of trading, where you need to rewire your mind to focus on one thing at a time. You have to focus on the thing in front of you. It's not you trying to multitask. Maybe when you're trading, you're scrolling on TikTok. That's BS. It's not about you capitalizing on the right market opportunities. That's why I never miss a trade. I never miss any fucking trade. So whenever I make some horrible mistake, I can easily correct myself, because I understand that failure is part of the process. And you can't learn anything in this life if you don't fail. Don't get me wrong. You will never ever buy the experience. That's why winners don't quit. We don't accept defeat. The only thing is you have to use that failure, as a part of motivation to keep going. It will only take you a few years, for you to understand this thing I'm talking now. Most of you guys, once you get into trading, you like to make big, huge amount of money in your first day of trading. It doesn't work that way. I've made 100k when I was 21 and I lost it. I broke it because I was trying to, do what the rest of people are doing out there. I was trying to follow the crowd, chasing big wins so I can be able to buy sparkers to impress you guys. But fuck it, I don't care about that anymore. I'm on the right path now, so the only thing I need is to keep on building the momentum, which I need in order to be able to achieve my goals, because 26 is gonna be great. Yeah, it's definitely gonna be a great year for us, and it's gonna be a great year for you if you believe so, and only if you put in the necessary effort. Most of you used to think that failure is a sign of weakness. No way. It only shows that you have the courage to try, because most people don't even try. Most people out there, they don't try shit. So every failure is part of the lesson, is also a victory, if you view it from the positive aspect. So guys, if you really want to, become a profitable trader in 2026, you just need to focus on the market structure, learn how to mark your key levels, and learn how to wait for the right moves. If you list maybe 0.5% of your equity or 1% to make 2-3% a day, that's a very good result. But most of you think it's only when you flip account to 1000% or 200% in a day before you know that you are good with trading. Fuck it. Trading Asian section. Then after the Asian section, I don't trade the London. I wait for the price manipulation. Then we get in during the New York session again. It's all about you focusing on the major key levels and working with the major kill zone as well. You can't just wake up anytime and start to execute your trade. If you look at the chart, you see on the 15 minutes time frame, TP, smart, price delivered. So guys, you need to understand something. Obsession is key. Casual effort will give you casual results. So if you're not consumed by the work, you always be average. You have to take risk. If you don't take risk, you're not gonna win. Trust me. If you understand how the basic market structure works, your trading is not gonna be difficult. It will be so crazy that you see a model that works for you, and then you'll be doing something else. You need to understand when the market is trying to create liquidity and when the market is trying to make the major move. You don't have to fight the trend. If you look at the overall market structure on the 15 minute time frame, you see price respected our key level. So it's not all about you trying to cover the overall inefficiency in the market. Just wait for them to fill the major gaps, which is they must create the internal liquidity. You need to pay attention to the market structure whenever you're trading. It's very, very important. If you don't want to make money, it's okay. But if you want to make money, you just need one system. A good system will save you from the whole chaos. All you need is to show up at the right time. Win or lose, you have to keep showing up. That's how you win. The problem is that most people don't understand that aspect of trading, where sometimes it feels like nothing works for you, because at the point it will cost you everything. It will cost you your sleep, it will cost you your social life, even you lose money. At some point, you go broke. So you need to stay focused on the right things and show up every day. That's how you win. So it's not all about you being too smart. You have to be crazy sometimes to know that you have to participate in the major prize action. So guys, you can see we're done with this setup. So we'll be back next week.